Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you'd like a free flashlight, and since Shawn is on remote today, he's our man on the scene. If you can get one of those, send a marketing at axontire.com, and they'll send you a free Firestone branded safety flashlight with a window breaker and a seatbelt cutter or a twine cutter or whatever you want to call it. But it's this sucker right here. Look at that. It's a beaut. It's a beaut. Get one of those, send a email to marketing at axontire.com, and they will send you a free flashlight in the mail. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. And learning more about your financing options in this 0.75% jump that we saw on Wednesday. And then next month, they're going to do the same thing again. It sounds like good time to learn about your financing options at AgDirect. So make sure you check that out. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on a couple times a week to talk about what's going on in the marketplace. So, Shawn, how you doing today, bud?
I'm doing really, really good. Really, really good. Never better.
Good deal. All right. So there is a fair amount of things happening right now. So if you take a look at what's happening in the overall marketplace right now, there's still a lot of weather stuff going on. The interest rate stuff we saw had the outside markets going up yesterday, but now they're all like just backpedaling about as fast as they can backpedal. You're starting to see a few things pop up here and there. I guess, Shawn, as you take a look at what's going on right now in this whole weather market, interest rates, all the stuff that's happening right now, what's your thoughts?
Well, right now, grain markets, including cotton, it's all about the weather. That will override any and all other factors right now because we're at the critical stage where the next 60 days, yields determined. And right now we've begun a hot, and now we're beginning to get some dryness coming in. We talked about how back half of June into mid-July, we would get a kind of weather scare. And when you get a weather scare, when you have extremely tight and small domestic and international ending stocks, you get a disproportionate move to the upside. And I do believe the weather market began today. Sometimes the markets will, kick the can down, but we have a long weekend coming up, Casey. Monday's a holiday. And so a 3-day weekend with the kind of heat and weather forecasts that the models are showing for the next couple of weeks, we're in the throes of some extremely volatile period coming up. And if we come in on Monday night and the weather models are still saying hot and dry, it could be a wild Monday night trade. And conversely, if dramatically the models decide it's cooler and wetter, we could see the exact opposite reaction. But the bottom line is we're in a weather market. And I do believe we have higher to go. How high, everyone always asks, well, how high are we going to go? The reality is you really never know how high you're going to go in a weather market because it's determined by exactly what is the nature of the weather market, how long does it last, what exactly, what areas actually get the worst of it. But I focus on the time frame. I really believe whatever the upside that we're going to see in corn or wheat or soybeans or cotton, we're going to see it between now and I would say from now to the end of the first week of July, because by that point we're going to have a 2-week forecast that takes us beyond middle of July. Now, if I'm correct with our weather forecast, that we're going to get a cooler and wetter pattern shift for the back half of July, that should be when the weather market ends. So I would focus on the time frame, end of June, first week of July. As we get closer to that critical time frame, we'll look at the charts, we'll look at the technicals, we'll look at what's going on with the dollar and other things, and we can better determine what kind of upside there is. But undoubtedly, a hot, dry weather pattern in a year with low stocks, there could be some pretty serious upside right now.
Okay. All right. So let's talk about what's going on right now in Brazil down. If you take a look what's going on there, there's back and forth and those kind of things. There has been some movement as far as upgrading the crop and adding a few more bushels back into that. As you look what's going on in South America right now with corn and soybeans, what are your thoughts there?
I mean, I don't think the crop is as good as the Brazilian government says it is. Obviously, the only way that you ever find out for sure what the truth is you roll the combine, you start logging in the yields and the test weights and all that sort of thing. And I don't get me wrong, it's a much better crop than last year. I don't want anyone to think that it's not, but I don't think it's quite as good as they're purporting. I think it's, I think they're saying 110 or 112 million metric tons. I think it's more like 105, 105, which is a really, so from 85, still big, but I think we're going to find out we have less bushels of Brazilian corn to sell than we're currently thinking at this time. And I kind of feel that's why the corn market really hasn't reacted too severely to the downside, because I don't think it believes the number. So,
okay. All right. So hurricane season, let's talk about that a little bit. You and I haven't done a true, kind of rundown of what we see happening in the climate, your climate models and those kind of things for a little while. But as we head into the season right now, I mean, I've heard some talk about an active hurricane season, not necessarily, Cat 5s all over the place type of thing, but just a more active hurricane season. As you look at that, couple that with what we see happening in cotton and energy and those kind of things, it doesn't take a big hiccup to really jump some prices up. So I guess, what do you see happening there?
Well, I always say, because I live in Hurricaneville down here in South Florida, I always say that, a bad hurricane season is if a hurricane hits your area. So
like a small tornado, right?
So like 1992, we had one hurricane, Hurricane Andrew, hit South Florida. We had a terrible hurricane season that year, even though it was extremely quiet. Okay.
Right. Yep.
So it only takes one.
Yep.
But when I look at the overall scheme, we have a weakening La Nina. That should mean it should be less active than the last 2 years. I still think it's above average, but not as active as the last 2 years. When we look at a much colder Atlantic Ocean, the sea surface temperatures of the Atlantic are much colder than they were the last 2 years. That tends to suppress the activity of the hurricane season some. So once again, that would argue for a less active season. When I look at, we talked about the quasi biennial oscillation many times on your show. The last 2 years, we had a positive QBO, which means going from east to west, which tends to enhance hurricane activity when you have a La Nina. Well, we have a negative QBO this particular hurricane season. That tends to suppress activity, which means it should be less active. So as you can see, we continue to see that the teleconnections, the different cycles we're following suggest a less active season than the last 2 years, but still above normal. But most importantly, where are the storm tracks likely to go? So, we went back and we looked at years that had similar kind of metrics. And what we found was that the highest risk area this particular hurricane season for direct hits is going to be your mid-Atlantic states and the eastern seaboard. That's your hotspot. That's your epicenter. That's where you have the highest risk of most of these tracks to potentially, create issues. So think the southeast, North Carolina, the East Coast up. That's where I think South Florida is always at risk, Casey. But I wouldn't view this year in Florida to be anything above normal. I think it's kind of just, we're normally at risk, right? But what's very interesting is that the last couple of years, the Gulf hurricane activity has been very, very high. We've had a lot of hurricanes going into those deep South states, Texas, Louisiana, that whole corridor there has been very, very active and very, very much impacted. Our work says that area is actually going to be the least likely to see an active set of hurricane storms. Now, it doesn't mean you can't have one. It does, like I said, it only takes one. But in terms of overall activity, we think that area has the least likelihood of having an active track of storms. So that's kind of what we're thinking. We're thinking if we're going to see some issues, Florida, of course, always an issue, but the Southeast, Georgia, North Carolina, the East Coast, we would be looking at that in terms of impacts to agriculture. In this case, it would be cotton, for example, and impact to human, damage and infrastructure. That'd be where we would think this hurricane season, might provide some fireworks for those that are in, that track. So
okay, so that leads me to my next question here. Tuesday this week, we talked about the natural gas situation with the compression export hub that exploded, and right now you take a look at what's going on there. Natural gas is like $7.40, $7.50. It's had a steady decline. It was up to like $9.50 almost there for a minute, and it came back down. What's your thoughts about natural gas if there were to be some kind of hiccup with a hurricane or some other weather related situation that would close down maybe another one of these export areas?
Well, remember last year, Casey, how unusual that hurricane was. It threaded the needle. It reduced production in the Gulf, but it kept the LNG terminals operational. Quite frankly, I'm not sure that's ever happened since we've had those LNG terminals before. Usually what happens is the LNG terminals go down and the production in the Gulf is really only a minor issue, and it's actually a bearish feature. You know what I'm saying? So I would tend to think that the chances of having another hurricane thread the needle like that, highly unlikely. I think more likely you'll have more LNG terminals either damaged or shut down, and that will back up natural gas supplies even further on top of the terminal, the Freeport terminal that's already been shut down, and it's undetermined how long it might be shut down, but they've made an indication that it could take until the fourth quarter to get it back to being fully operational. So I think the market would react initially, Casey, bullishly because of what happened last year. But I think you need to be very careful because it normally is actually a bearish feature, and you could have a rope-a-dope where you go straight up and straight back down because the market realizes it's actually going to shut down more of these terminals on top of what we already have. So, I think if there is one that sneaks in, Casey, be very mindful of downplaying the bullish impacts. I think it'd be more bearish than bullish this particular year because last year was almost a 1 in 1 million shot to get a hurricane thread the needle like that. I doubt it'll happen again. So,
okay. All right, let's jump over and talk about protein market here just real quick and what you see happening there. I mean, right now we are starting to see some pretty good uptick right now in live cattle and what you see happening there. Thoughts there going into this grilling season, like we talked about it. We've got a diminishing herd, and we're trying to build that back up. Guys are still kind of playing with that idea because feed prices are still pretty high. I guess thoughts there on what you see happening there as we move into these hot months. I mean, we've had a few of these places, especially like I saw some stuff down in Kansas where 2,000 head of cattle were zapped real quick on a weekend when it got to be 100 degrees down there.
Well, I mean, cattle's in a weather market too. I mean, the cattle weights are crashing. Literally crashing because of the stress on the animals. We're dealing with some deaths, as you talked about. Even Western Europe is looking at some extreme heat. We talked about Europe in your show, but that would be another hot spot for what would create this weather market into late June into mid-July. So the cattle market's losing supply from the lower weights and from the sudden deaths of these animals. We don't know how many more deaths will occur. We don't know how much longer the weights, will fall. But we do know that we had a lot of cattle placed on feed, and they're losing weights at exactly the time that they're supposed to be coming to the marketplace. So what it means is we're permanently losing what was supposed to be a pretty healthy period for the next couple months for supply to feed into this, seasonal summer demand. And if we lose that, we don't expect we're going to see another round of heavy cattle on feed numbers coming up in the months to come. And so it sets a really substantial air pocket for overhead supply. And I think the packers are beginning to understand that the amount of animals that are going to be available to come to the market as we approach the fall and get into the holiday demand part of the season could be extremely tight. In fact, some of the tightest we've seen maybe since 2013, and they're starting to bid up the animals to procure some of that and get ahead of the curve. And so we think this big price reversal we saw in cattle and feeders last week really was an important turning point. And even though, we can have some corrections like we had today when feed prices go higher, we think overall, we think the trend is up, and it could really get pretty exciting in the fall, especially if we start getting some lower feed prices once this weather market ends. We could finally get prices that cattle producers can, really look at their balance sheet and say, boy, we're going to put some serious equity back into the business after a really tough couple of years here. So
right on, man. Okay. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is that you're doing over there at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there that goes over our various tools and techniques of how we do things to see if we could be of value to your listeners.
Right on. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the Moving Iron Podcast YouTube channel. Make sure you do all that, and you can go to movingironllc.com for everything Moving Iron related. Also with the Moving Iron Podcast Summit coming up here in Nashville, Tennessee, September 6th, 7th, and 8th. If you're a dealer, want to check that out, and by all means, I'd love to have you. Send me an email at movingironpodcast at movingironpodcast.com, and I can answer any question you have there. So with that, I'm Casey Seymour with Shawn Hackett. Let's go to Iron, folks. Out.
Moving iron in the 21st century. Hard work